Hey, you're watching Bull Boom Bear Bust. My name is JJ, and today we're going to talk about the very low supply of diesel fuel. Now, we've got another warning out here. 25 days left, code red, major fuel supplier is warning of historic low levels of diesel fuel. And this runs everything from freight trains to 18 wheelers to a lot of different things that need uh, to operate to get from point A to point B. We're talking about your food in your belly, because when the shelves go empty, when the deliveries stop, all of us here are going to be in big trouble. Now, I'm not saying this is definitely going to happen, but this is a real article, real warning here. This one happens to be out of Mansfield Energy. And let me just break this down a little bit here. Now, first of all, these warnings of low supplies have been around for a while now, and sometimes they'll give like a 60-day warning, a 90-day warning, and people start saying, okay, the days, they come and they go. There's been a warning before, it was 90 days, that day came and went, nothing happened. So you think, but a lot has happened. Look at the price of diesel fuel. We're well over $5.30 a gallon right now. We haven't been that high since about the financial crisis time, 2008, and at that time it only briefly went above $5 and went back down. Now we're hovering above $5 for quite a while. So people that think that nothing's happening, just take a look at the price, and it's not coming back down as far as I can see, because supplies are just getting lower and lower. Now we know on the gas side of things, as far as fuel for our cars, that we've been releasing a lot of the reserves that are supposed to be there in a time of an emergency, and those supplies are being used, and we're down to about a 40-year low now. So obviously, if they're using fuel that's supposed to be there in an emergency, there's something going on. There's an emergency going on, I would think, and I would think that we need to be, aware and cautious of this. Here it is: diesel supplies are very scarce across the U.S., especially in the Northeast and Southeast. Supplies are at the lowest seasonal level for this time of year, the lowest level of all time for this time of year. There's something else here. People think nothing's happening. We're at the lowest level of all time. Now, I'm not saying in 25 days it's going to run out. Maybe there's going to be more reserves. Maybe we'll get shipments in from who knows where. Maybe there'll be a rescue. But I definitely would say, be alert and be ready for this. Quote, because conditions are rapidly devolving and the market economics are changing significantly each day, Mansfield is moving to an alert level 4 to address market volatility. Mansfield is also moving the southeast to code red, requesting a 72-hour notice for deliveries when possible to ensure fuel and freight can be secured at economical levels. So they want a 72-hour notice for any deliveries are needed, so they can make sure that they have supply. So I think this is something to be concerned about. Don't pull your hair out or get worried about it, but definitely be prepared, because if you're prepared, then you're not going to have to worry, because you have a plan in place. Next, let's talk about the personal savings rate. Now, I haven't really seen a lot of news or headlines out there about it, and as far as I know, I was one of the few channels talking about it when we first started seeing it dip below where it was before the health crisis came out a couple years ago. Market Watch today: Americans' personal savings have fallen off a cliff. Brace yourself for just how much they have declined. Well, you guys already know we're at financial crisis levels. If you've been on this channel, I should say you already know. Maybe if you're newer here, you don't know, but here it is. The savings rate of Americans on average has plunged to where it was at the peak, at the height of the financial crisis. And that makes perfect sense when you look at the cost of living right now, when you look at wages, how wages are not keeping up. And of course, the powers that be, they're going to point to the unemployment number and they're going to say, look, everything's fine, there's no recession. But we're seeing the consumer pull back on spending. We have warnings out there from retailers that they have a huge backlog of inventory because of the slowdown in demand from the consumer. We see the debt levels that also kind of underpin that point, that this is happening. Americans are entering a financial crisis on a personal level. People hear the word financial crisis, they think, oh, the banks are going to fail and there's going to be people running through the streets and guns firing in the air. The financial crisis is happening right now on a household budget level, on a personal level. If this doesn't point it out to you, then I don't know what else to say, but this is a financial crisis. It's not what you think or what many people think. They think it's going to be the stock market crashing, again, banks failing, more bailouts. It's completely different. In this case, Wall Street looks good. The corporate profits are looking pretty good. With a lot of the small businesses that got wiped out in the last couple of years, corporate profits are pretty good, especially for critical critical items. And we're talking about food and fuel companies. We're going to see huge profits from oil companies, no doubt, because that's an essential item that people just have to buy in most cases. But when it comes to entertainment items, even a lot of the social media stocks, a lot of the tech stocks are taking a beating. And a lot of it has to do with advertising. Financial advisors offer their top tips for boosting savings as economic uncertainty increases. So they're giving you some tips here on how to boost savings. They're saying carpool and cut back on fuel consumption. Don't eat out as much. I mean, obvious things. But let's talk about this. The personal savings rate of Americans have plunged this year, hitting $629 billion in the second quarter of 2022, according to the Fed. That's down $1.98 trillion from the second quarter of 2021. Think about that, down $1.98 trillion. That is a fall, just like the article says, falling off a cliff. And I have to give props to MarketWatch for putting this article out. I haven't seen too many mainstream articles even talking about the savings rate, because it's a negative thing to actually point out. It makes it obvious, that the economy is not as good as it really is being talked about. And people look at the economy and they say, well, the economy is the profits of the corporations, and the corporations, they give jobs to people. Well, actually, most jobs in America, our majority is actually small business, but that's actually dwindling. And pretty soon it's just going to be mega corporations, mega companies with most of the jobs, and I think ultimately probably all of the jobs. But when this finally ends, it's going to be back to basics, folks. And I'm not saying I have a timeline on this. It could be a very long time still. I still think we're going to see the Fed pivot, and we're going to see another huge surge in the markets. When the Fed does pivot, it's not going to mean the markets are going to turn around overnight. For example, in 2008, the housing crisis, when the Fed pivoted and started cutting rates, it took the housing market another 3.5 years to bottom out. So when the housing market starts going down, it's very, very difficult, or it takes time, I should say, for it to bottom out and come back up, because the economic activity related to housing is such a big part of the economy. So you're not going to see it rebound right away. But as far as the stock market goes, you can definitely see that rebound, and it's actually been very strong lately, but we're still way down from the highs that we saw at the beginning of the year and at the end of 2021. I still think it's a short squeeze. They're squeezing a lot of the retailers out of there. Once enough retailers exit their short positions, then the market will resume downward. That's what I think. I think it's a big wealth transfer scheme for the most part. Of course, they're looking at profits right now, and they're saying, okay, profits are good, and that's why the stock market's going up. Of course, they're always going to have a reason. They're going to put a piece of news out there to explain the big volatility and the ups and downs in the market. Here's another report. This one's out of the economic collapse, titled Teetering on the Brink, 63% of Americans are living paycheck to paycheck. Now, we've looked at different reports and studies over the years, and we see it sometimes a little higher, 75%, sometimes in the 60s. So I always put the number at about 70%. It's been holding pretty steady as far as the paycheck to paycheck crowd. The top 30% typically is not going to be hurt that bad, because they're already up there. They're already at the top. They already have assets. They already have some wealth accumulated. And typically they're in the top 30% because they know how things work. Of course, there's always exceptions and anomalies. We'll see some people that were in the top 30% and they're going to drop down out of the top 30%. But for the most part, the people at the top stay at the top, right? You rarely see billionaires losing all their wealth, except for, I guess we talk about Kanye West, from the things that he said. Yeah, so it's the bigger wealth divide, the wealth gap between the rich and the poor, the haves, the have-nots. And I think it's going to continue to get worse. So if you're in the middle class right now, I think you're in a very dangerous position. I would consider myself middle class, and that's why I'm really honed into a lot of this news, and I like to bring you this news. I really enjoy putting this news out there for you, and I hope you all watching today enjoy these updates. Please give me a like and subscribe. This channel could really use a little bit of a boost. All right, everybody, we're going to wrap this up. Thanks for being here. Bye for now. Keep stacking. Peace.